In Consumer Corner, we take a look at trends creating a buzz online in China. On today's show, we'll look at luxury brands fleeing the Shanghai bund and see what Chinese internet users have to say about it. Chinese consumers used to rush into luxury stores, sweeping up luxury products like they were nothing but cheap vegetables. Corrupt officials and the super wealthy were buying up anything with a foreign label on it. They wanted to use the power of fashion to show off their abuses of power and wealth. But now those days are over. Luxury goods have been talking about the corruption crackdown like it's part of their bottom line. The incredible economic growth in China used to work in their favor. But now they're seeing their cash cows moving away from their fancy stores. As China Business News reported, recently the world's largest luxury company, LVMH, published its financial report for the second quarter of this year. The report shows the company's turnover only saw 1.3% in increases compared to the same time last year. The company's executives attribute the low turnover increase rate to China's sluggish luxury market. Statistical data from bank consulting shows the market size for luxury products in China only saw 2% increases last year. However, by comparison, in 2011, the market saw over 30% in increases. The low growth rate in China has forced many luxury brands to ditch their prime real estate. One of the most blatant and symbolic examples is on the Shanghai bund. The bund used to be littered with top luxury brands opening new stores. A company owning a physical store in the area was representative of their large market share in China. But now they're ditching those high-rent outposts, and these include major names like Hugo Boss, Dolce & Gabbana, Patek Philippe, and Boucheron. The Shanghai bund is one of the most popular tourism destinations in the country. It's also never without a sea of people. But the problem for the stores is that most of the people are tourists, and these tourists prefer taking photos of old buildings or having a cup of coffee in a cafe. And word to the wise, selfies and coffee close-ups don't make money for anyone but WeChat. Only a few people actually visit these luxury stores, so a huge flow of walkers does not directly bring high revenues to luxury stores. This has been a distinct difference compared to stores in Shanghai's shopping center on Nanjing Road. Take Gucci's store on Nanjing Road as an example. It has a daily turnover of over 1 million yuan, or about $160,000. By comparison, its stores in the Shanghai bund can only bring in 1/10 of that revenue. Luxury stores in the bund have seen gloomy sales with incredible exposure, but it comes at the heavy cost of high rent. As China Business News reported, the average rent on the Shanghai bund is about 900 to 1,200 yuan per square meter per month. That's equal to $13 to $18 per square foot per month. This is while the rent on Nanjing Road is only half that amount. Luxury stores escaping the Shanghai bund perfectly matched the gloomy sales of luxury good companies in China last year. Bank Consulting sent a report last year on China's luxury sales. It shows they only increased by 2% to 116 billion yuan compared to 2012. That's about $19 billion. Last year, Chinese people spent 15% less on luxury products compared to the previous year. China Business Journal attributes the gloomy market to the government's anti-corruption campaign. Some government officials or public servants earn small salaries but wear luxury products. These people are now easily targeted by the campaign if they keep up their ostentatious and gaudy lifestyles. But they aren't shutting down all the shops, so maybe there is more reason than just the crackdown behind the closure of shops on the bund. Luxury brands opened up too many stores while the going was good. However, their sluggish sales don't justify that decision anymore. Chinese internet users also showed their opinions on luxury stores escaping prime business areas. Some attribute it to the country's high prices for luxury goods. One wrote, quote,
"Luxury products prices in mainland China are too high compared to other countries. I would rather travel abroad to buy them instead of getting them in China."
Some believe the country's anti-corruption campaign was a reason behind the sales plunge in China. One wrote, quote,
"Government officials and public servants used to be the major consumers of luxury products. However, they are afraid of the government's anti-corruption campaign. Luxury companies have shut down their stores on the Shanghai bund because they cannot make money off these people anymore."
However, some internet users believe the high rent on the Shanghai bund is the major factor in their departure. One wrote, quote,
"Now even luxury brands cannot afford the high rent on the Shanghai bund. You can just imagine how crazy the country's real estate market is."
Another Weibo user agreed with that statement and said, quote,
"There are many shopping malls under construction now in Shanghai. Luxury companies can put their stores in these new areas to save money. Locations on the bund can only keep them if they reduce the rent."
The luxury goods market has finally seen the real market in China. Talk about the growing middle class and their cravings for luxury goods are done for now. It's clear that there was a lot of government-related money going towards luxury goods. And now it seems the excessive growth and aggressive marketing for luxury brands has come to a slowdown, or at least a focus on locations where their target buyers can spend money with some privacy.